Thank you, Secretary Geithner, for being here with us today. I want to switch to the housing issues. And in your testimony, you state that as we move forward, we must take care not to undermine the housing market, which is showing signs of recovery, but is still weak in many areas. I'm hearing a lot of concern about how Dodd-Frank will reduce credit availability in the housing market through some of the proposed rules for a qualified mortgage that increases liability and a qualified residential mortgage that requires a 20% down payment. Recently, the director of the CFPB, Mr. Cordray, said that if the qualified mortgage is drawn too narrowly, that could upset the mortgage market. That could be a notable example of a rule itself restricting access to credit. I'd like your opinion on this. Do you believe that there needs to be a broad QM definition?
Well, I want to just start by saying that I completely agree that right now, mortgage credit is tighter than it should be. And it's tighter than the basic requirements put in place by Fannie and Freddie and FHA, for example. And the main reason for that is because banks and servicers, given all the mistakes they made and the damage they made, feel much more vulnerable now to what people call putback, which is these institutions protecting the taxpayer by putting back to those originators loans that didn't meet those initial tests, no-doc loans or some of the other loans they described in that context.
And that's why we're working on the QM and the QRM.
And yeah, but I think that concern is the biggest remaining cause of the fact that credit is tighter in mortgage than it needs to be. And independent of that rule writing process ahead, I want to just make it clear that the FHFA, Ed DeMarco to his credit, and the FHA are looking at ways, even ahead of defining those rules, that they can help address some of those concerns, that its residual uncertainty about reps and warranties of putback risk is leaving mortgage credit harder to get for an average individual with a good credit score than should be the case. Now, you're right that those rules have to be designed very carefully. And what this chairman of the CFPB is doing, but the other agencies responsible for what you call the qualified residential mortgage rules are doing, is they're trying to figure out how to balance appropriately the obvious need for more careful, prudent underwriting standards, more standardization, better disclosure, with the need to be careful, not to overdo it, not to go too far.
But wouldn't you agree that in that context we need to be sure that we don't define the QMs too narrowly so that we don't restrict access to credit more than is necessary?
Well, I wouldn't say, I agree with the objective completely. I think you want to make sure that both these two rules are designed together and carefully to reduce the risk that you restrict mortgage credit more than it would be prudent to do and is necessary to do.
All right, thank you. I want to move to another topic now, since the time is obviously short in these 5-minute sectors. I want to go to the end user issue. You may recall that ever since the Dodd-Frank conference, there's been a debate about whether non-financial end users were intended to be exempted from the margin requirements by the statute. That was clearly what the members of Congress intended. In fact, Chairman Dodd and Chairman Lincoln acknowledged that the language was intended to exempt those entities that use swaps to hedge or mitigate commercial risk. The regulators, though, have read the statute otherwise and have issued regulations now that do, in fact, require margin from those non-financial end users. And they basically take the position that, notwithstanding their understanding of congressional intent, it was the exact language that they feel bound by. Because of that, I've introduced legislation to correct that and make it clear that there is an exemption for the end users. And when he was before the Banking Committee recently, I asked this question that I'm going to ask you to Chairman Bernanke, that would it be appropriate for us to correct that language and provide an exemption for non-financial end users so that it's very clear that that is what congressional intent and what statutory language requires?
In my own view, I don't think you need to do that, because I think the way the statute was designed, you gave flexibility and discretion to the regulators to try to achieve the objective you laid out. I think the concern is if you open this up too much, you're going to let the exception undermine the critical safeguards over financial institutions that the law was absolutely intended to cover. I don't think this requires a legislative fix. I think the law gives the regulators discretion to get that balance right, but that's obviously something that we need to continue to look at, and I'd be happy to consult with you more, to talk to you more closely about it, to get a better feel for how how they're defining that balance.
So are you saying that you believe that the statutory language as is currently gives the regulators the authority to exempt non-financial end users?
I think it gives the regulators, I want to be careful about how I do this, how I say this, and it's not my authority, it's the authority of the of the regulatory agencies. I believe it gives them the ability and the discretion and the authority to define an exception that I think meets your objective.
But you're not saying that there should be no exception for end users. You're saying we need to get it right.
Yeah, that's right. I agree. I believe the law, as you wrote it, does try to make sure you're not capturing people and risk you don't need to capture. But we're worried always that if you create exceptions and loopholes in this context, that you'll end up swallowing and undermining the broader safeguards that are necessary. I know that's not your intent, but that has to be our concern.
But if I understand you correctly, then you're saying that you're worried that if Congress does this, they may get it wrong and be too broad in the exception?
I didn't mean to quite imply that. I'm just saying that I think that the balance the Congress struck in the law I thought was right, and I think the regulators were given the ability to try to get that balance right.
Then would you at least agree that if the law is interpreted to mean otherwise, in other words, if the regulators, I understand the prudential regulators to be taking the position that they do not have that discretion. Would you agree that the regulators need to have the discretion to address this issue and provide an appropriately formed exemption?
I think I want to talk to them a little more carefully about it and come back to you and follow up on it. But again, I just want to say this is, in general, we're trying to be very careful to make sure that we don't legislate. This is not your intention. We don't legislate things that would weaken the overall protections in the bill. And we think the law gave the regulators the ability to strike an appropriate balance in this context.
And you're not saying there should be no exemption appropriately defined for end users?
No, I think what I'm saying is I think they should implement the law as you intended it.
Thank you.
Senator.